It's Lobosi Forex here, and I have good news. I have a Forex trade for you to trade today. So the first thing I would love to share with you is the 5-year treasury note. Now, there's something that I need to tell you about the rocket booster strategy now. But before I go on, I would love to thank my mentors, Tim Sykes, who wrote the foreword to the book, The Penny Stock Course, Matthew Creator, who wrote the book Rocket Stocks, and Robert Kiyosaki, who wrote the book Rich Dad Poor Dad. And you can find all their books on Amazon Kindle. Now let's dive into it. Now, if you look at these are called 5-year treasury notes. Now, 5-year treasury notes, unfortunately, in the long term, they are not good buys. So let's look at an example here. Now, if you look at this 5-year treasury note, it went up, right, from a certain position, but then it started crashing. So before it crashed, it crossed the 50-day moving average. So basically what I am showing you is how to take profits. Okay, so at this point, when the price crossed the 50-day moving average, this was your time to take profit. Okay, you take profit right here when the price crosses the 50-day moving average. But ideally, your entry should, depending on the margin level that you're getting. If you're not using any margin level, you should exit at a profit of 50 to 40%. So meaning when the treasury note yield hits let's say I don't know, 150. Okay, when it hits 150, all right, when it hits 150 points, about that amount, $150, you should be, your aim should you should aim to take profits. Okay, so ideally, or if not, take profit when the price crosses the 50-day moving average. The second one I would love to show you is the currency of Canadian futures. So Canadian futures have gapped up above the 50-day moving average and the 200-day moving average. So Canadian futures have gapped up above the 2-day moving average, as you can see here, the 50-day moving average represented by this blue line and the 200-day moving average represented by this red line. So I'm giving you examples of the rocket booster strategy. Another thing that we can do is we can check out the screeners now. We can talk about, let's talk about technical analysis. Let's play around with the screeners. Okay, so now let me see what we have here. Let's go to the stock screener. Sadly, we had the market crash, which was not obviously good for anyone, so we can reset this. Let's add what are we missing here? Let's add let's add this one here. Okay, so now we're going to try and find a stock to trade. Okay, let's add the MACD. Alright, so let's try and find a stock trade. So the first thing we're going to do, we're going to start with the weekly pattern. So the level should be above the signal. Okay, that's the first thing we're going to make sure we take note of. So we have Berkshire Hathaway. Now remember, the best time to buy is when the market has crashed. So we are going to try and find a buying position on the weekly chart. So we have an uptrend on the weekly chart. Okay, now let's try to find a correlation on the daily chart. Okay, we have, let's see what we have here. Now we are mainly focusing on the Dow Jones because we want to find options to trade. Alright, so let's see if it crosses down, let's say on the week. Okay. Now the last step is the moving averages. Now we can use the ratings saying strong buy, not on the day, on the week. Okay, so we do not have a strong buy on the week. What of a buy? Let's try that. Okay, so we have everything in line. The only challenge is we do not have a strong weekly buy. Maybe let's try checking on S&P 500 or Nasdaq. So we only have Domino's Pizza, which seems to be a good buy. Let me see what we have here. Okay, so Domino's Pizza seems to be a good buying position. Now again, you need to understand, like when you're buying a stock, you have to account for risk management. Now in this case, we were buying based off the weekly chart, so meaning we're looking at it in terms of long-term buying. If you want short-term day trading, then excuse me, then you have to sign up for the for an advanced account on TradingView, so that you can use different time frames. Like for example, if you want short-term day trading, you can use these time frames. So for the free account, I'm only able to show you for daily and weekly time frames. That's why you find that most of the findings are very volatile, meaning sometimes you have a buy position and then the price crashes. That's because we're using long-term charts, and with long-term charts, unfortunately, or is it fortunately, you are not supposed to use margin. But once in a while, they do come whereby they're good, like daily charts, where you can still in daily charts that you can still take advantage of on a weekly basis. So I'm trying now on the daily chart, and we haven't found anything. Let's try and reset, because right now what we're looking for is a buying position. Okay, so let me see if we have anything, if we have any buy rating. Or the market is just completely crashed. Okay, let's see if we have any buy ratings on the day. Okay, we have some hope. So we do have, even though sadly most of them have crashed, we still have some. Most of them have crashed on an average of 3%. So this is what you would expect, right? Like a volatility of 3%, 3%, 3%, 3%, 3%. So when you're doing risk management on the rocket booster strategy, you should expect your risk management level of at least 3%. So account for that 3% market drop. Right, so if you're doing 2x, that means you're risking 6%. You're doing 2x, you're risking 10%. So try not to risk more than 10% at least. So in this strategy where we're using the daily chart pattern, when you're using the daily chart pattern, try by all means to account for a 6% market drop. Okay, so ideally we would have at least 5 of these ratings. If we were to have 5 of strong buy ratings on one chart, then that's the strategy actually. So you have one, so maybe the next one would have been like a 4-hour rating, right? Would have put like a 4-hour rating, and then unfortunately you'd have to upgrade, right? So the strategy, the rocket booster strategy, is very simple, and let me see if I can share it with you how easy it is. So basically what's all right, just a second. So basically what's supposed to happen is okay, just a second. So the rocket booster strategy is like this. So we have 4 hour, 2 hour, 1 hour, 30 minutes, 15 minutes. So 1, 2, 3, 4, 5, 6, 7, 8. All right. So 1, 2, 3, 4, 5. So up to 30 minutes. So 4, 2, 1, 30. All right. So I'm basically giving you the secret formula. So you want, this is what you want. All right. Okay. So that's the strategy. Okay, 1 2 3 4 5, like this is what you want. Now in order to get this type of strategy, okay, let's do this. Right, so you can kind of see that it has not kept up with the strategy. Okay, we can do it manually, but even that's not something that I would like advise. Like you can do it like from this part, like from the day and the week. You can do it using the screener, but you would have to like double check for yourself on these other timelines. Okay, let's see if I can copy these. Background we can use. All right, we'll use something a bit like darker. Okay, so basically we'll make it look like a chalkboard. Okay, so maybe blue. All right, that's a bit better. So this is the strategy basically. That's basically the strategy. Okay, but then again, you have to make sure it's above all the moving averages on like on all the time frames, so we have 12. And the 50-day moving average should be above the 200-day moving average. Okay, so most of them are breaking down by the 1 hour chart pattern. So the only challenge with this one is it has not crossed the 50-day moving average, has not crossed the 200-day moving average on the day. So as you can see, the price is penetrating through the 50-day moving average. Right. Another way that you can do it without paying for TradingView is you can use this technical screen. Alright, you can use this technical screen. So there are ways around, so, and that's the strategy that I know. Let me see if I can show it to you. So that's the rocket booster strategy, okay? So that's the strategy. That's what we're looking for, right? And then that's why you kind of have to like pay TradingView, because you're gonna save time. You're going to save time. So that's the strategy, and it's kind of similar to what I've been doing all this while with Forex, because especially with Forex pairs, that's the kind of situation that I have been looking for. Which is not very easy to find. The 50-day moving average has not crossed the 200-day moving average, so we will not count that. The daily pattern. Sometimes it's good to see it physically so that you understand exactly what's happening. Oh my god, this one is close. This one is very close. Too close. Let's see. Maybe we can have a 15. Oh no. Too close. Too close. We're almost there. So we have found something. It looks like 3% is the magic number, right? So yeah, this is definitely a good buy. Only Lord knows what happens. But from the daily chart pattern, you can tell it was triggered by the Mark D. I think this one applies for the short side as well. It's more of like 3% is the magic number in Forex or something. Right, so we also have this one on the short side. I'm assuming we also have like this one on the short side. So it's like 3% seems to be like the magic number. On all of them. So let's look for 3% gains. So we have this one as well. Which other one is 3%? So we'll just look for 3%. So this is what we have. Remember, when we looked at this one here, it went up by 3%, and that's what gave this the buy signal. So that kinda is our like guide, especially when trading Forex, right? We're looking for those 3% moves, whether up or down. So it's more of like 3% is the breakout. It's the breakout in Forex trading. 3% is the percentage breakout, right? So we have this one here, which is perfect, and this one here as well. So we have 3% drops, and they all seem to be aligned with the Australian dollar compared to Canadian. This one is crazy. So yeah, this is what we have. So all these are breakout patterns. We're going to try using the paper trade account. XRP. XRP. Alright, let's close this one. Okay. Alright. So basically this is it. This is the move. And I love scanning for Forex patterns on the week. It's about 4 grand. Oh wait, I was supposed to short sell that one, not buy. Made a mistake. That's why I love doing it over the weekend. Let me see. So there you have it. We have found our forex trade. So the key benchmark was definitely 3%, and remember, it has to be a strong buy on everything, on the 4 hour, the 2 hour, and the 1 hour, and 30 minutes. So this is called the upper. Let me see if it will appear on. I doubt if it will appear. I doubt if it will appear on the. I'm trying to think of where it will appear. So this is basically a 30-minute entry. Okay. I wish I could remove that. Alright, I've removed it. 1, 2, 3, 4, 5. So basically this is a 30-minute entry. Alright, based on the mark D, these are 30-minute entries. So this is called the upper long shadow. That's what it's called. It's a 30-minute entry. These are called the long lower. This is called the long lower shadow. Okay. So basically these are 30-minute entry charts. Okay. So this is called the long lower shadow. I don't know if we can. Let me see. Hope we can. I hope it can catch it. Let's see. It's just. I don't think I don't think it has caught it yet. There we go. So the long upper shadow. Right, there we go. Here it is. To indicate by domination of the first part of the session, candlesticks will present a long upper shadows as well as short lower shadows, consequently rising bidding prices. So this is called the long upper shadow. This is exactly what I wanted to show you. It hasn't appeared on these other charts, but it has appeared on this one. So this is exactly what I wanted to show you, and it's coming like that, right? It's like all the way through, but it has appeared right here. So this is your entry signal after the breakdown. But remember, the key number is 3%. Also, another, you know, this reminds me of. Let me show you something. Maybe you might be doubting that the strategy works. This is exactly what happened to was it this one? I don't know if I'm right or I'm wrong. Sorry about that. Let's remove these. All right. So this is exactly what happened to this one here. So it went up, I think, by like 2.8%. Then the following day was the entry, right? But you can see from the closing price, it did kind of rise, even though it was a little bit bumpy, right? But you could see it did kind of rise, right? It came up like that, it went up like that, then it just went like bumpy, right? So this is kind of similar to what's going to happen to these charts here that we have seen. Very similar chart pattern. Okay, very similar chart pattern. All right, very similar chart pattern. And this is exactly kind of what happened here as well with Turkey as well. So it's the same pattern in forex. And that's why the rocket booster strategy is very powerful. This is the strategy. Okay, very easy. You want a strong buy or sell, a strong buy or sell. Okay, so strong buy or sell. There we go. But again, you know, you need to be careful. You need to master how to use you have to master how to use risk management. So don't over leverage. All right, try your best not to over leverage. You know, but that's the strategy. The risk management part, it's really up to you. Yeah, so I think that's it. I don't know if there are any other forex trades that we can find with similar chart patterns, but I really doubt it. There are also these minor ones we can check out. I don't know where I ended. We can see, we can try and check them out, but just based off performance, you know, off the rip, we'll be able to tell you know, whether they're in sync or not. Because remember, we're looking for that 3% move. So already just from the onset, we can tell which ones are you know, trending. So we want 3% and above, not even 2.5, 3% and above. So just based off the performance on the week. All right, remember, you have to do this on the week ideally, because the markets are not moving and you want to be calm and collected as you are doing this thing. So that's the chart pattern. It's very easy. It's a very simple strategy. Just excuse the internet. The internet is a little bit slow. So remember, the entry is on the 30-minute chart. All right. So this is the strategy. Okay. I thought there were 5 steps. Yes, there's supposed to be 5, not 6. 5. We'll make it 5. Right? Let's just make it a bit easier. So the entry is on the 30-minute chart. Okay, so that's the long upper shadow, long lower shadow, sorry. Then this is the long upper shadow, long upper shadow. There we go. So 3% is the benchmark. Okay, 3% is the benchmark. So we have 1 2 3 4 5 6 7 8 9. We have over 9 forex patterns to trade. Then if you want to know the journey that you're going to take with this strategy, again, I'm going to show you the journey. So this is the journey that you're going to take. All right, This is the journey that you're going to take. Let me show it to you. Of course, it's very volatile. You should remember that aspect. So imagine, though maybe not very visible, so just imagine buying at the closing price somewhere here. So ideally you're supposed to buy at the closing price, right? The following day, ideally. Closing or opening price, but you know there will be that variation. So look at the low and look at the high. So from what you have, about 0.5 basis points risking. So let's say you're risking, if 0.5, all right. So just say 0.7, right? So maybe you divide that by let's say it's 7. Okay. So basically that's 2% risk. Without any margin, you're risking 2%. So if just excuse me, I'm coming. So that's the strategy. So now remember, you're risking about 0.7%. So without margin already, you're risking about 2%, and that's without margin. Okay. So give or take, you're risking 2% on every position. So if you were to use margin of 4, then you'd be risking 8% on your position. If you were to use margin of 5, you're risking 10%, right? If you were to use margin of 3, then you're risking 6%. So ideally in this case, you know, you don't want to risk more than 5x. Alright, so you'll be risking 10% of your capital if you decide to trade futures. Alright, with the potential of making 18% in your first year. So if you say 18 times 5, then you are at the potential of making 90% return on your capital. 18 times 3, 54% return on your capital. And so that's what's going to happen to you. Okay. So this is how you trade forex. Now I don't trade forex. I quit trading forex, but yeah, I mean there are hedge funds out there. There are banks that do take a heavy interest in forex trades. Okay, there are banks out there that take a heavy interest in forex trades. We can arrange them on the good buys and the good sells. There we go. So we don't need these anymore, right? So we can arrange them based of green and red. So remember, this was just an example. I was just giving you an example of how the journey will be. So basically these are all the same chart patterns, and the entry, remember the entry is on the 30-minute chart pattern. We're looking for the long, we're looking for the long upper shadow on the buying position. We're looking for a not long upper, long lower shadow, sorry, which is very hard, to see here. But on the short selling side, we saw a long upper shadow on one chart pattern, which was here on AUDCAD. We did manage to see a long upper shadow. AUDCHF as well, we have another long upper shadow here. We also have another one on AUDHKD, because it seems to catch the candlestick patterns on the short side rather than on the long side. So it seems to catch the candlestick patterns on the short side rather than the long side. I mean, we can go on and on, because we have about my goodness, we have about 9. We can scan all the forex trades. We can go as many as we can go, right? But 9, I think 9 is okay. I think 9 is a good example. Let me see what you have here. Anyway, let me share this video with my TradingView audience. Because it's so powerful. It's so powerful that I feel like I have to share. Hello there. My name's Louis Forex, and I'd love to welcome you to this. Now I'm here to share with you a powerful strategy. And it's on. It has 5 steps. This is so you have to the 50-day moving average, 200-day moving. The price has to be above, and frames, right? So the second step, not a strong sell. Third step, and followed by the third shadow. And long upper shadow. Okay. Chart pattern. And then you you're going to read frame to share with you. Problem that I found. Chat. Okay. It's not indicating the entry on all of them. Okay, bearish. On all of them. Looking for my spectacles. Them. On AU tail. Another indicator. Not really. It's not. It's also a good entry, but it's not indicating. So let's look at it. That's okay. And for some reason, in the but remember you're holding. This is another long low. It's the same. It's a very chat. Or chart. So basically this but this one because the 50 to confirm them. Remind you of the 50-day moving. Phys physically is the best. Alright, sorry about that. My internet is. There we go. This is called a breakdown. crazy, right? And I think that's the challenge with using white boxes, right? Using these things, you would think they'll give you accurate information, but the information is really not that accurate. You really have to be an expert when you are doing these things. Feed on any one of these happening. Breaking for watching this. Robert, the penny stock who wrote books on Amazon. Take care. Thank you so much.